This is a debrief of task 10 of the personal tax sample assessment number 1. So task 10 is about inheritance tax. So let's have a look at part A to begin with. Identify whether the following statements about inheritance tax are true or false. So the first statement, husbands, wives and civil partners are assessed independently for inheritance tax. So the answer to that is true. So we're all individuals and we're all assessed for inheritance tax individually. There may be some transfer of exemptions from partner to partner, but we're still assessed independently. The second statement, the £250 small gift exemption is per transferee per tax year. So per transferee, not per transferor. So this allows people to receive a small gift, so a birthday present from someone who may be quite old without affecting their inheritance tax. So the answer to that is true. And notice in the reference materials, which are available in the exam, in note 18 it tells us there that it's £250 per transferee, per recipient. The third statement, any unused annual exemption can be carried back one tax year. So that is false. Any unused annual exemption can be carried forward one tax year. The fourth statement, when one party in a marriage or civil partnership dies, the unused part of their nil rate band may be transferred to the surviving spouse and used against the surviving spouse's lifetime transfers. So that's false. So we can transfer some nil rate band, but it can't be used against the lifetime transfers. It can be used against the final estate. And then finally, Mr. Q's wife died in 2018. Her estate on death did not use any of her residence nil rate band. So the inheritance tax system allows us to transfer our home to other people. We can transfer our home to our partners without incurring any inheritance tax. But also we want to be able to transfer our home onto our children, don't we? So there is a residence nil rate band to allow us to do that. So Mr. Q died in 2023, so after Mr. Q's wife. So the maximum amount of residence nil rate band that could be used against Mr. Q's estate is £350,000. So here's the reference materials again, and let's see, they've got some exemptions here, but let's have a look at note 16 about tax rates. And it shows there we have a nil rate band for residents of £175,000. And notice the little asterisk there. So this applies when the home is passed on death to direct descendants of the deceased after April 2017, which is relevant in this case. Any unused band is transferred to a spouse or civil partner. So that we know therefore that Mr. Q's wife would have £175,000, which was unused, and then Mr. Q dies, so he has £175,000 as well. So collectively, they have two lots of this nil rate bound, which total £350,000. So in this case, the answer is true. Okay, let's move on to part B. So complete the following statements that relate to inheritance tax. Miss R made 2 lifetime transfers in 24-25. The first one was in May 24 for £2,500, and the second one was in September 24 for £4,000. So Miss R had used all her annual exemption from 23-24, that's the previous year. So normally we can carry forward any unused annual exemption, but there is none available, it's all been used. So that means then, so when Miss R made this first transfer of £2,500, we would apply the current year's annual exemption of £3,000. So that means that's all wiped out now, that's exempt. But there's still £500 remaining. We've not used all of the annual exemption. And then for the second transfer, September 2024, there's a transfer of £4,000. We still have £500 left over of our unused annual exemption. So that means that 3,500 of this would be subject to inheritance tax. So the amount of annual exemption that will be set against the September 2024 life transfer, well, yes, we could use 500 of the 3,000 that hasn't been used yet. Yes, remember we've got 3,000 exemption, 2,500 has been used, we've got 500 left to apply against the 4,000. Okay, in part 2, Mr. P received 7,500 from his grandfather on the occasion of his marriage in December 24. So the max amount of the transfer that may be liable to inheritance tax when the grandfather dies is... So notice in the question it says may be liable, because remember with these potentially exempt transfers, if the person dies after 7 years, then no inheritance tax is payable. So, but some may be payable if they die within those 7 years. Now let's have a look at to see if there's any exemptions from this, because this is for a marriage. And we can see in section 18 that yes, if there is a marriage or a civil partnership and there's a gift from a grandparent, then we've got 2,500 as the exemption. So that's tax-free. So in this case, we've got a gift of 7,500, 2,500 is exempt, and therefore 5,000 is chargeable. And then in part 3, Miss T made a lifetime transfer in January 2020, which was treated as being potentially exempt. So Miss T died in August 2024. So in this case, we're using this 7-year idea. So if we give a gift and die more than 7 years later, then that gift is considered to just be a lifetime gift and there's no inheritance tax. But if it was given in the 7 years prior to death, then there are inheritance tax implications. So what we need to do then is work out, well, how long ago was this gift given? So Miss T died in August 2024. So let's count back in number of years. So 2023 will be the first, then 2022 will be second, 2021 will be third, August 2020 will be the fourth year. So if the transfer was made in January 2020, that's between 4 and 5 years prior to the death. Here's the reference materials for tapering relief. So we can see there if it's between 4 and 5 years, we have a reduction of 40%. And the question is asking us the taper relief reduction percentage that will apply is 40%. And then the last part of this, Mr. D lives in the UK and made 2 gifts to his granddaughter during 2024-25. These are the only gifts he made. So we need to complete the table below to show whether these gifts would be a chargeable lifetime transfer, an exempt transfer, or a potentially exempt transfer. Okay, so let's remind ourselves what these things are. So a chargeable lifetime transfer is a gift made to a relevant property trust. So chargeable lifetime transfers are immediately chargeable to inheritance tax when it is made. And then in addition, further tax may be payable on the transfer if the transferor that dies within 7 years of making the transfer. Whereas the potentially exempt transfer is a gift made from one individual to another individual. Okay, and this is where we'd have to apply the 7-year tapering relief. So on the 19th of June 2024, there's a cash gift of 2,000. So that cash gift would be exempt because we'd simply use the annual exemption of £3,000. And then for the jewellery, so the jewellery, well, would we be giving that to a trust? Again, it's unlikely, isn't it? So that's going to be a potentially exempt transfer because we're going to be giving the jewellery to a person and therefore it's potentially exempt.